Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, Jay, it's been quite a week. From Monday till Friday, we had quite a move in all the metals with all the news. So I think it's going to be great for our listeners.
Yeah, it really has. Big rally in gold and silver as well. I mean, really nice. Just taking a look at the technical charts, it's exciting, especially for those who have been holding and waiting for a moment like this. And I'm noticing news that many of the experts expect the rally to continue into next week. You think the same thing?
Yeah, I think it will. I think there's a little bit of risk of oversold, especially on silver, not so much gold, but it could be. When something goes up 23%, we're not even out of the first month of the year, and here gold's up, silver's up 23%. Gold's up about 8.5% for the month. We could see a little weakness, but the point is, with all the events of this week, everything is pointing toward very, very high prices in both gold, silver, and palladium over the next several weeks.
Well, fantastic. I'm looking at the analytical charts here for gold, and wow, I mean, just the last several days, it's really nicely recovered. A solid, nice uptrend here, breaking through that resistance line that so many were hoping that it would. Now nicely in the 1700s, back to more familiar territory after dipping down into the 1500s, and I'm sure that scared many precious metals holders, especially gold holders. Did you experience that, there at your company? Were you getting calls from people who were concerned about the prices?
I did. Of course, you always got people that are concerned. They're concerned about it going down and not worried about it going up. I like it when it goes up, but anytime you have a market that's 11 years old and has the kind of move that gold had, you're going to have ups and downs. Did have a lot of calls this week, people want to know what to expect, but when you had the events of this week with Iran talking about taking gold for oil from China and India, and you see a potential currency for oil we've heard about many times in the past that seems to get more realistic all the time, and then Obama's speech that he never talked 1 minute about the deficit. He wanted to print money and create jobs, print money and create jobs, and then the next day Bernanke comes out and says we're going to keep interest rates near zero through 2014, and inflation may be 2 to 4%, but we're not going to raise interest rates. And to see, a change in policy to where interest rates are below the inflation rate, and of course, what we saw was the long-term bond get hit hard as the 30-year rate went from 3.15 to 3.45. So, unless they're in real short term, they need to be getting out. I mean, there's no reason to stay in a bond. They need to be getting that money in the metals, and we're just guaranteed that the dollar's going to go down for a sustained period of time now with the events of Bernanke and Obama this week.
Yeah, I mean, they're pretty much intent on taking the dollar down in value, especially that comment, as you made, from Obama. No sense of direction forward. And then you listen to Ben Bernanke from the Fed talking about low interest rates until the end of 2014. That really puts a needle into the balloon, so to speak, of those who said, well, high interest rates are going to bring down the price of gold. Just give it time. Well, now the Fed is admitting that we're probably looking at another year, 24 months or more before they even raise interest rates. And so we are definitely setting up for a very big time of inflation. And of course, metals are the primary beneficiary of that. And so you're talking about those people who have money in bonds, which has been a big bubble in many ways. You think it's wise to begin moving money out of bonds and moving it into metals?
Well, I think today, as we tape this on Friday, the end of the market is closed. I would say today, some of the biggest sales today, orders were from people either cash annuities or bonds in, because pretty clearly with the events of this week. And then the one thing we haven't even talked about is in the next 3 or 4 weeks, we're going to have a debt limit problem again. If we go back to August the 4th, and remember in August, which is ordinarily kind of a neutral month for metals, we had a $100 up gold there in 2 days when they announced raising the debt limit $1.2 trillion, and here we are 6 months later, and we're already out of money again. And you know as well as I do, Jerry, they're going to print that money. We're not going to close the government down in Prairie. So we've got Bernanke zero interest rates, below inflation rate. We have a new debt ceiling getting ready to be raised, and we have bonds having the worst week in 13 months. I mean, how much plainer does the writing need to get on the wall before investors know they've got to get over with whatever percentage they want in metals and get in there and see that this is an election year also, we haven't mentioned. It's also always good for metals.
Yeah, good point. I mean, here we are in the middle of election year, and no one wants to rock the boat. The Federal Reserve is going to obviously keep rates low, so we don't want to rock the boat. We want to keep things kosher for the Washington Stooges so that they can continue their spending spree. And there's no doubt about it that those who have been waiting on the sidelines, this must have been the call to action for them, especially when we take a look at the price of silver, which has become so affordable, relatively speaking, to the last several months, where we see it now dipping below $30. We finally made a buy signal here at our own FTM Insider. We said it's underneath $30. We're buying aggressive.
Right, I remember that. It was right on cue too. And you look at it now, it hit $34 today. It's just amazing. But like I said, from the end of the year, you see it now go up 26 or 7% for the month of January. But the one thing the listeners need to always remember is if they sit where I sit and have to deal on the supply side, and I've said it many times in the past, but I'll say it again, you spent all your time trying to educate people on gold and silver, where they would, make their position in it. But now I spend a lot of my time I've got a conference call set up Monday with a company in Canada that knows of my reputation that wants to deal with me. And I've got to look for metals anywhere I can look for them because, the supply in silver, more so than gold, is just getting tighter and tighter for physical silver. And the other thing to mention here, whether it's gold or silver, look at the discounts and the ETFs. Jerry, we brought this to your listeners months ago to watch because like Eric Sprott said, there would be a discount in ETFs. And now you look at GLD is selling at a 6% discount to the real price of gold. It tells you that big money has figured out that all the gold's not there, which has already been testified to in court by Andrew Maguire. So people out there they've had their first strike here, the ones that are holding ETFs, to realize if everybody knew all the gold was there or silver, they wouldn't be selling at a discount. These ETFs are selling at a discount to the spot price of metals. So we're starting to see things we've been talking about on this show for months all come to fruition in a very short period of time.
We've seen a real nice rally in platinum. We've seen a real nice rally in palladium. Palladium, obviously, you do offer, and you did make a buy signal on that a while back, and it's turning out nicely now as it's really crashed through that resistance line that it had. How about platinum? Platinum has just been really nicely going up. Have you made a call on that?
It's interesting you ask. I'm getting back. Mitsubishi is the largest broker of platinum, and I like to talk to them because they, have the information. But I do have a call on Monday. I'm very close, and of course it's bounced up about $100. People say, "Well, you missed the bottom by 5 or 6%," but that doesn't mean it won't crack back down. But I do believe with all my heart that you'll see platinum at a higher price than gold, as it has been for most of the last 12 years in the near future. So I'm very close to getting a buy signal, but I've got people buying platinum now that aren't scared about it dropping 5 or 6%, that know that it's going to catch up with gold. So for the people with that kind of mentality, they should be buying it right now and not waiting. Those that want to wait to see that it's not overbought and see the technicals on it a little more sure, then we're probably within a week of seeing that happen.
Yeah, just looking at this from a technical perspective, as I look at the charts, I mean, you're obviously the precious metals guru here. I mean, when it comes to this stuff, but I'm looking at the charts here. I see platinum, you're right. It's a little overextended from a technical standpoint from where it's been. Palladium, a little bit similar. Silver, on the other hand, looks very, very aggressive right now, and it looks like it's just crossed through a really key zone, which I really like to see. In gold, looks like the most attractive one of all the bunch right now.
Well, gold is. We've talked about most of the talking we've done on the show has been about gold because it is the backbone. It is money. It is a solution to any problems in the future. Will be part of it. It is the money. It is money. So, I think you look at gold and that article that we sent out on our email updates today, written by James Sinclair on King World News, is phenomenal. He's exactly right. Mainstream, it's been people with knowledge like me that know this industry, and I've got people I talk to, and then you've got major institutions and central banks buying. But all of a sudden, Sinclair nailed it today. Mainstream is finally figuring out, and I think a lot of that happened this week when Obama and Bernanke spoke, and figuring out there's no other thing that should be the bedrock or the cornerstone of your portfolio but gold. Not to say you shouldn't have stocks and other things, but the number one investment, period, based on 11 years experience plus the next several years, and based on every technical thing out there, should be gold. That should be the number one investment that every person owns in their portfolio.
Yeah, I got to agree as far as from a personal perspective. That's absolutely vital for me. Okay, now I want to take a moment and address a question. We received many questions from readers. One thing I want to say, somebody wrote in recently and said, I recently signed up for Tom Cloud's email news updates, and I had no clue that I was going to get this nice, colorful, informational piece on investing in gold. And I don't know if we really promote that too often, but if you do sign up for Tom Cloud's updates, not only do you receive timely articles on gold and silver investing, you also receive his buy and sell signals, and you receive, initially when you first sign up, a very nice gold investor's kit, which really helps you understand a little bit about investing in gold. We also have lots of webinars, educational free webinars on our page. Just simply go to ftmdaily.com and click on the Precious Metals button, and you can learn a lot more there or sign up for his newsletter. But we got an email this week. Our office, basically gave this to me and said, we need to address this because we see this question fairly often. I think it's a very fair question, Tom, and I'm just going to read the question to you. It comes from Lee, and Lee says this. I'm going to read the whole thing. I believe that precious metals are beneficial to have in an economic meltdown, but the question for so many of us is just how will we survive a horrible depression if we have precious metals? Who will buy them from us if there is no money? Will the stores take gold instead of dollars, and how will that work with all of this heavy stuff? Will we be able to pay our bills with precious metals? In other words, how will all this work if we are in possession of gold and silver, but no one, including the government, has any money? Many of us are not investing in this very much because we're scared of left just holding it. Bartering may go on and no one will want it. I had a friend recently tell me that toilet paper and food and ammo will be better than gold and silver for bartering or just for survival. Please address this, as I know for a fact that many people are not buying gold and silver because they can't wrap their mind around just how it'll work to profit for them or help them survive in a depression when the banks are closed and the government has no money to buy it from us. Sincerely, Lee. And, Tom, I think that's a very valid question because some people out there are thinking to themselves, gold, silver, that doesn't make any sense, especially whenever, there's the banks are closed and we're having all kinds of issues and problems. Explain and address that idea of those out there who say, I'm not investing in gold and silver because you can't eat it.
Well, there's two answers to it, Jeremy. The first answer is you hold the gold and silver until you need something to buy those that Lee mentioned. You use gold as a bridge or silver as a bridge to buy and to hold, and then say that it comes and she needs a month living expenses. You then sell some of the gold and silver, and then you buy all the necessities that she mentioned. The problem that I have now 34 years experience with that. It's kind of like a little backward thinking because, they're trying to educate themselves and learn because they haven't been in it as long as I have or have the experience you have. But, what I see investors doing is trying to figure out, how to get out of paper money when you've got something like the dollar that's gone down for 11 years except for last year, and here it is headed down dramatically in January, is you want to get out of that and get into something that preserves your wealth. And then as you need it, you liquidate it and use it to barter with or trade with or do whatever you want. And then the last thing, when they took gold up in the Great Depression and used it, of course, a lot of it, when it was $20 gold pieces picking up, the government had to end up paying people $32 an ounce to get them to turn it in, even though, quote, they confiscated it. If you were only gold or silver, the premium on it would rocket in the world market. And, of course, today is unlike 1933 in that the way China and India and Russia and Brazil, the BRIC countries, are buying gold and encouraging their citizens to buy gold, is a completely different animal. So I think you look at it, and certainly don't put all your eggs in one basket, as we've talked about, but you really should be buying the gold, buying the silver, and yes, you can liquidate it into those paper dollars for exchange, because one thing to remember is when you have a country of 300 million people, even if they close the banks for a holiday of 3 to 5 days, they'll be back with a currency quick, because you can't have 300 million people running around loose cannons. So you're going to have some kind of paper exchange. So I don't worry about it, but certainly I've been in it a lot longer. I worry a lot more about getting rid of my paycheck every month and getting it out of paper dollars and into something else, whether it's oil or whether it's a commodity or whether it's precious metals or whether it's another currency. That's what I worry about, because derivative debt that this country has built, we haven't seen anywhere near the consequences yet that we're going to see. So hopefully I've touched on several different points about the question that Lee had.
Yeah, that's a good answer. And I know many people who are in your shoes, Tom, not just, precious metals dealers, obviously, but also those who are just very, wise with their money, and business owners, and, those who are in the know about the economy are definitely moving towards hard assets. They simply don't want to get caught in the middle of a paper meltdown, which, many countries have seen. And so I think your answer is dead on. And I think hopefully Lee and anyone who is like that, who has that same question, will hopefully get a nice resolve to that. In essence, you take your money and transfer it into something else as a way of holding it, instead of holding it simply in paper dollars. So
right.
Very good, Tom. All right. Well, if the folks want to contact you, tell them how they can.
Well, they reach me at 800-247-2812, and they can go to ftmdaily.com and click on the Precious Metals button and sign up for my free email distribution that goes out usually 2 or 3 times a week. So we're trying to keep people updated. There's a lot of things going on. So once again, it's 800-247-2812, or go to the FTM Daily button and sign up for my free newsletter. And we don't sell or show anyone our distribution list. It's strictly in-house for our clients.
All right. Fantastic, Tom. Well, I'm looking forward to another big week next week. So have a great weekend. And
all right, you too, Jerry.
Take care.